June 6th, and we're looking at the E-Mini S&P 500 chart. And if you recall, yesterday the market got slammed yesterday, which is, I think, a real good thing, and that's what I've been expecting for here for the last week or so. Especially when the market rallied on this day right here, failed to take out that high, and then came down through this low. That was significant. I told you that when the market took out that low, I was expecting for the market to come back minimum right here, roughly at about the 50 exponential moving average, and we're getting real close to that level right now. One thing I want to point out to you is just a few key levels here, okay? Let me take off this red marker, because I think we're starting to get into some real interesting support area right here. And if broken, we could go much lower. So you'll see I've got two white horizontal lines. Okay, this one right here that I've got placed here. Okay, at about 1603, about 1604, about right where we're at right now, 1604. Market just opened up. And then the second white horizontal line, which is right here. Let me show you why I think these are significant. First of all, the market gapped here, right, from this day, right? This is the gap. Never even attempted to fill that gap, and we ran up. Okay? Now we're back to that level. So that first horizontal line represents the low of that gap that was not filled. And then the second, the lower white horizontal line, represents the prior day's high, which was the high, all-time high up until that point right in here. So, as you know, resistance becomes support once broken, and that was obviously broken to the upside, right? And now we're coming back to that level. And not only do we have that level, but we've got that 50 exponential moving average in here. And we're coming back to a centile number, a significant round number in the S&Ps. And that number is 1600, right? The more zeros you have, the more significant support and or resistance it is. And since we're trading above that number, it becomes support now, okay? So this is a very key level right here. So what I'm looking to do on any weakness today, now again, I don't know what's going to happen. Nobody knows what's going to happen today. I must say tomorrow the jobs report comes out. And that's going to be a number, okay? That's an important number that a lot of money managers and hedge funds are looking at tomorrow. If that number is less than 150,000, that's going to be a bad number, and the market should tank. If it's greater than that, I think what you're going to see tomorrow, if that jobs number is over 150,000, this market's going to rally, and you're going to find a lot of big players, a lot of big money managers are going to be picking up stocks and driving this market higher. That's what I think. Again, that's a bias. It doesn't really matter. Let's watch price action to see what happens. So right down in here, right, 1600 is a big number. Again, this was the gap area. Market didn't even attempt to fill that gap, and it ran up to this all-time high. Now we're coming back. So this is really the first, what I think is a first major support level. So we may get a nice bounce today. So what I'm looking to do is I'm looking to sell some puts on the SSO at a lower price, roughly at about 75, 76. Okay, so that's kind of my a little analysis here. Another thing I want to point out here is, let's look at the three corrections that we've seen this year, right? The first one being right here, okay? That correction from this high down to this low, okay, was about 66 points. 66 S&P points down. The second pullback, second correction was right in here, okay? And that was only 63 points. Now this one, so far from this high to the low of today, which actually took out yesterday's low by a little bit, is about 81 points. So this pullback, believe it or not, this pullback that we're seeing from the all-time high to today's intraday low, or yesterday's low, whatever you want to call it, has been about 80 points, a little over 80 points. So far, this pullback is larger than the prior two pullbacks that we've seen. We're back to the 50 exponential moving average. Again, tomorrow's a big number. Look at, since I've been doing this video, the market's literally rallied from 1603.5 to 1610 3/4. So we've seen a 10-point rally, an 8-point rally since I've been doing this video in the last 5 minutes. So I mean, we could see a bit. We're going to see a move today. Okay. Again, I think this is a pretty big support level down in here, and I outlined all the reasons behind why I think this is a big support level. But again, you've got to be aware of tomorrow's job number that comes out, okay? Real quick on a couple of stocks that I've been in and been talking about lately. Okay, the first one is the stock CEF. CEF, I just wanted to let you know that I did cover that yesterday afternoon at $15.97. So I'm out of that stock. I didn't have any more patience for this, quite frankly. My first objective was up in here. Move my stop loss, so it was pretty much a free trade, locking in profits. So again, I took about 47 cents on the trade. The market didn't rally as much as I thought, so I thought I'd exit, free up some of my money, looking for other opportunities in the market. Let's talk about gold just real quick. Again, gold hasn't done anything. I'm real tempted on just calling this a flat trade, although I'm up this, what are we long? We're long at 133.75. It's at 135.08. I'm going to keep my stop at 133.69. Pretty much a break-even trade on this. So I'm going to call it a day. Have a profitable day. Hope the analysis, the brief analysis I did in the S&P helps a little bit here. And if you got any questions, always email me. Let me know. Let's see what happens, and I'll be back with you tomorrow. Bye for now.